This video is being made for all the aspiring new traders or investors out there because I just want to remind everyone how, what's the word I'm looking for, boring or even difficult it is to place successful trades day after day. You've probably seen YouTube videos, other social media posts about people getting rich quick, get the big Lambo, all that stuff. But the simple fact is the process is way more intense than that. Specifically that, let's just look at this chart of Google, for example, and let's say that you wanted to place a trade on Google and you wanted to buy it at exactly $150 a share. Now I just want to walk you through a quick example just for, a basic mental model so that before you go out there and trade and invest and just start doing wild things with your money, you can sort of work your way through this. So let's say you wanted to buy at Google at 150. Well, the next step is you would need a stop loss too. Now in this video, it probably makes sense to have our stop loss back into this gap fill. See this empty area? There was an event that caused Google to spike. So if it goes below this, it's back into this sort of no man's land. So we'll make this our stop loss. And let's do 146 even. And we're going to write text stop loss. And then up here, we said that 150 would be our entry. So this is our entry. Okay, so now we see our entry and our stop loss. So what we're doing is we're mapping out our trade. Now, most traders may not ever do this. They just press buy and hope for the best. But if you start to have this type of mindset, you might make less bad decisions and really start to see things through and visualize what your trade actually is. So in the worst case scenario, we buy here, market turns, Google just drops. But we would sell by the time it hit our stop loss. And after all, you don't want to hold something and it go to zero and you lose everything. You'd like to have a stop loss, so at least you salvage some. That's the whole point of stop losses. And at least you know this is how much I'll lose. So when you go to bed that night, you say, well, I'll lose $4 a share. The entry is 150. The stop loss is 146. 150 minus 146 leaves you with $4. So if you bought 100 shares and it hit your stop loss because it just tanked like this yellow marker, you'd lose $400. $4 times 100 shares. But this is where trading can get boring and not as easy as everyone makes it out to seem because it's, where's your take profit? Well, if we just zoom out on the price history here, we can see that there's not a whole lot of price information here. So if we bought here at 150, what are we hoping for? That it goes to the top of the wick here, 151? Well, that's only $1 a share. So you'd be trying to make $100 on this trade, but with the risk of losing much more than that, $400. Why would you want to make $100 for the chance to lose $400? That's not a great trade. That's not a good ratio. Even if we assume that Google can suddenly spike and reclaim its highs here, say at 153, so let's do coordinates 153. Even then, the trade is your stop loss is a $400 stop loss, and your potential reward is a $300 gain because it's 153 is where your take profit is. 150 was your entry. So that's $3 per share. You bought 100 shares. That's a $300 potential gain. So if it goes up to here, $300 potential gain. So the key thing here is where trading gets really challenging and where the true experts are made in this regard is mapping this out and actually trying to find something that makes sense. So like we said, if it goes down to your stop loss, you're going to lose $400 on the trade. So you want to make sure that your reward is something greater. Maybe it goes to 160. But how would it go to 160? That means it has to break through all of these prior levels and do so fairly quickly to get to 160. How realistic is that? How long could it take? These are the types of analysis and decision making that you can start to do. But really the point of this video is just to demonstrate how hard it is to map out a successful trade. More importantly, you should never just buy on a whim or just buy because you think something's going up. Map the trade out, visualize it. Because once you visualize your trade, we're going to write this is our take profit here. Once you start to visualize the trade, you'll start to see just how challenging it is and what you should align with your expectations, because there's one more component too. Look how long it could take. Let's just say 160 was our profit, right? That takes us into May. And that's being fairly generous. That just would be a straight up move. Generally, these types of moves could take months. So we bought 100 shares And we bought 100 shares on the basis that this could take several months. Well, now you have to ask yourself, what else could you have done with your money over this period of time? Could you have bought a CD? Could you have a certificate of deposit, a treasury bond? Could you have done something more interesting? Could you have invested in yourself, in a course, in a program? That is where trading is oftentimes boring, and where new traders and investors, they get trapped by this Wall Street persona of getting rich quick. They think markets are easy, but really, if you take a step back and map your trade out, you realize the true difficulties of markets and just how hard it is to find that setup for your trade. Now, I'm going to make more videos about such setups in the future, but really, I just made this video to get the point across that trading can be boring, trading is very difficult, and if you take the time to map your trade out, even from a super simplistic level like this, your stop loss, your entry, your take profit, you'll make less bad decisions, but you'll also see the reality of markets, that they're really not as fast moving sometimes as people want you to believe. After all, that's how Wall Street makes its money. That's how lots of trading courses get sold. All of that, it all happens in making people think that you can just buy here. So I just bought up to the moon. I'm rich. I'm buying a Lambo. All that stuff, but it doesn't work like that. There really is a trade to map out, and I'm going to go into more detail. This is just an entry-level course, entry-level quick mental model for you to work with. In future videos, I'll definitely get more deep. Thanks for watching.